Hey everyone, welcome back to Corporate Dakota, the place where we peek behind the corporate curtain and see what's really going on under the hood, maybe a little too much going on. Today we're diving into a filing from Orchid Island Capital Inc., a company that deals in real estate investment and financing. Specifically, they've made a filing to update us on something called an ATM program. Now that might sound like a cash machine, but it's actually a way for companies to sell their stock gradually over time. Think of it like a slow drip feed of shares onto the market. So what's the big news here? Orchid Island Capital, along with a bunch of financial folks like JP Morgan Securities and BitEgg, have amended their agreement about selling shares. They originally set a limit on how much stock they could sell through this program, and now they've increased it. Under the original agreement, they were allowed to offer and sell shares worth up to $350 million. Pretty significant. And they've already sold a good chunk of that. As of now, they've actually sold over 34.5 million shares. That generated a massive amount of cash, bringing in about $266.5 million. So they've been actively using this program to raise money. But here's the kicker, this latest amendment just added another $150 million to that limit. So now the total available for sale through this program is about $233.5 million. This tells us the company is planning to raise even more capital through selling its own stock. It's a common strategy for companies when they want to fund growth expansion or maybe just bolster their cash reserves without taking on debt. The stock they are selling is their common stock, which is the basic ownership stake in the company. Each share has a par value of just 1 cent, meaning that's the minimum value assigned to it on paper. And this stock is traded on the New York Stock Exchange under the ticker symbol ORC. So it's a publicly traded company, and this ATM program is a way for them to manage their stock sales in the public market. This whole filing is happening because of the rules set by the Securities Exchange Act of 1934. This is a foundational law that governs how companies report information to the public and the Securities and Exchange Commission, the SEC, to keep investors informed. The report itself is dated July 28, 2025, and that's also the date of the earliest event they're reporting the amendment to their distribution agreement. This means it's a pretty recent development. To make sure everything is on the up and up, the company has also included legal opinions from their lawyers Vinson and Elkins. These opinions confirm that the shares they are issuing are legally valid and that everything related to US federal income tax matters is in order. This is standard practice to give investors confidence in the offerings. Now, what's really important in any of these filings, especially when a company is talking about selling its stock, are the forward-looking statements. They're essentially saying, this is what we think might happen, but things could change. They're required to include these to manage expectations and protect themselves from lawsuits if things don't turn out as planned. They're telling us that new risks can pop up, and they're not promising to update these predictions if things change. So anything about future stock sales or performance should be taken with a grain of salt. If you want to know more about the specific risks they face, they point us to the risk factors section of their annual report for 2024, a finding we've likely covered before or will cover soon 24, a filing we've likely covered before or will cover soon. Right, at the end of it all, we have the signature from Robert E. Corley, the chairman and chief executive officer of Orchid Island Capital. His signature signifies that he's confirming the accuracy of this report on behalf of the company. So what does this all mean for Orchid Island Capital? They are actively using their ATM program to pump more cash into the company. This increased funding capacity suggests they have plans perhaps for new investments, strategic acquisitions, or to strengthen their financial position. The use of an ATM program is generally seen as a flexible way to raise capital as needed, rather than a large one-time stock offering. It allows them to capitalize on favorable market conditions or fund ongoing initiatives. While raising capital is often positive, it's also important to remember that when companies issue more stock, it can dilute the ownership stake of existing shareholders. So while they get more money, each existing share represents a slightly smaller piece of the company. Looking at the broader picture, Orchid Island Capital operates in a sector that can be quite sensitive to interest rates and economic cycles. By raising cash, they might be preparing for opportunities or perhaps insulating themselves from potential downturns. It's a strategic move that signals confidence in their future plans, but also a reliance on the equity markets to fund their operations. As always with these filings, we encourage you to do your own research. This is just our interpretation of the key takeaways. What do you think about Orchid Island Capital's decision to expand its stock offering program? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up, and to keep getting these clear and concise corporate insights, make sure you're subscribed. And don't forget to join our Discord community linked in the description for more discussions. And to connect with fellow corporate decoders, thanks for watching and we'll see you in the next one.